Happy Thursday, ladies and gents, Allincrypto here, and welcome back, guys, for another jam-packed daily market update. If you are new around here, we drop one of these every single day around 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening in the cryptocurrency markets, but also the broader markets. And that's where we're going to be starting this video off. We are going to be looking at a clip that came out yesterday of President Trump and what he had to say about Jerome Powell and the replacement of Jerome Powell. And probably more importantly to us as asset investors, what he's essentially hinting at in regards to the monetary system and the continued borrowing, accelerated borrowing, in fact, that's going to be caused on the back end of interest rates where they are right now. And I think that's very telling because the game is very much up for the monetary system. It's no coincidence. And by that, I don't mean it's going to go away. I mean, it's going to lose belief in it, in the sense that it's going to start to crumble, perhaps, under other assets, taking that store of value, alternative lifeboat status, like what we've seen with gold, like what I think silver's going to do, like what Bitcoin's going to do, like what assets more broadly, even stocks are going to do, as we see continued proliferation of the monetary system. And the thing is now with the internet, everybody notices it. Typically, it's only been the rich people that have taken advantage of it because they've owned assets and not cash, unless you're Dan Pena. But now what we're seeing is people kind of going, hang on a minute, this is just blatantly obvious. Let's look for alternatives. And it was amazing that Bitcoin was given to us, and we've always highlighted that divine nature of that in terms of timing. It's amazing that Bitcoin was given to us at the perfect time, being 2008, when the cracks really started to show. And the dollar also will relate to this, potentially is about to break down out of a channel that it's been in since 2008 when Bitcoin was given to us. And Bitcoin and the crypto space right now is all exceptionally well positioned to kind of help with the transition that Christine Lagarde and Jerome Powell are talking about in regards to another kind of Bretton Woods or Bretton Woods 2 Nixon shock-esque moment. So we're going to be starting the video off there. Rather a complex topic, but we'll break it all down, relate it to you as an asset holder. Then we had some pretty insane news in regards to Fannie Mac, or Fannie Mae and Freddie Mac, essentially now offering mortgages backed by crypto and crypto assets. This is huge. Again, it's further continuation and links in with what we're going to speak about at the start, and that's people moving away from this kind of standard that we've had to a more kind of internet value or internet of value standard that we're going to see, where assets play more of a monetary role. And potentially, I think the future isn't one currency to rule them all, it's multiple, but they're all connected by these interledgers, and essentially value can be swapped for value. And that was Peter Thiel's vision, who's played a very important hand in the cryptocurrency space thus far. OpenCoin, Ripple, XLM came out of that. Founders Fund, obviously big investors in many projects. But that's the vision that we're moving towards, and this is potentially further part of that. There's also a alternative fiat ETF being launched in line with the theme that we're going to be sticking to. JPMorgan also filing for licensing, specifically to do with the crypto space. And then we've got Jeremy Allaire, who of course is with the UK government right now. Let's hope something good can come out of this government. A lot to get into. Let's kick things off with what President Trump had to say about Jerome Powell just yesterday.
You were criticizing the Federal Reserve Chair before coming to this summit.
Yeah, I think he's terrible.
I was wondering if you've begun interviewing different candidates for the Fed pick.
Yeah, I know within 3 or 4 people who are going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. We have no inflation. We have a tremendous economy. Hundreds of billions of dollars of tariff money is pouring in. Factories are being built because they don't want to pay the tariffs, so they're building them all over the country. I think we're close to $15 trillion. I told you $5.1 trillion from the Middle East alone, but of investment money coming in. There's never been anything like that in the history of our country. But we have no inflation. And we have borrowing because Biden, stupidly, they did short-term debt. So we have borrowing coming up. And, you know, we'll go 10 years, maybe longer, maybe shorter, but we'll go a long period of time when we do the debt. And because of him, because of this guy, we will have to pay for years. We'll be paying for him. And I said to him, listen, there's no inflation. He says, but maybe there'll be some. That's true. I said, if there is some, what you do is raise the rate. I'm okay with that. You raise the rate in 2 years from now or in a year from now. But because the rate's high, we have to pay more for debt. it's pretty equal. In other words, if it's 4%, it's 4%. If you drop it a point, you'll pay 3%. So it's fairly equal, not necessarily, but fairly equal. So we're going to end up paying maybe 2 points or 3 points more. 3 points would be about $900 billion a year because of this very average mentally person. He's an average mentally person. I'd say low in terms of what he does, low IQ for what he does, okay? Wait, so instead of paying $900 billion, we don't want to pay 900 just because he doesn't want to lower the rate. I said, if there's inflation in 2 years or 3 years or 1 year from now, you raise the rate and you take care of the inflation, among other things. But he's probably a very political guy, I guess. I don't know. I think he's a very stupid person, actually.
It is like we're living in a movie, really, isn't it? That what took a very funny turn towards the end is a very serious statement that Trump is making there, certainly if you're an asset holder, because they're talking about an extra $900 billion a year in spending. And the game is really up for the fiat systems that just have to... Inherently, a usury system where money is debted into existence can only but result in more money being created. If you think about it logically, me and you, I'm talking to you on the other end of the camera, are on an island. We have $10. I lend you that $10 with interest, put usury on top of it. You've now got to get $11. The problem is there was only $10 to begin with. So what do? Well, you have to come to some sort of an agreement to... You're essentially, if you're the person with the short end of the stick, which is where that saying comes from. Years ago in the UK, we used to use sticks. This is where we also get the word tally from, and the saying short end of the sticks. The person with the short end of the stick owed the money to the person with the longer end of the stick, which had notches in it. A bit of history there for you in regards to monetary systems throughout history. But usury is not a new thing. In a usury system, the only outcome is further indebtedness and further proliferation of that system to pay that debt, or essentially ultimate ownership. And the game is up. And if you're an asset holder, that game can benefit you in the sense that you buy assets that appreciate more than the system itself, and or at worst, keep pace with it, so that you're not sliding down a grease pole like 98% plus of people are in the world. Probably more, 99%, and it's the top 1%. Their net worth goes directly up in correlation. You can overlay M1 or M2 or whatever with the top 1% of individuals, and they move in tandem, just like assets move in tandem. And this is why this channel exists, because you guys need to be investing. You cannot trust the fiat systems. In fact, they are used as a weapon against you. And what Trump said there, more importantly to me than anything, was they're going to continue to proliferate at a phenomenal level. And that is the great game. And I think this is putting pressure, amongst other things like geopolitical tensions, on the Dixie, or the dollar, and its role globally. The dollar has been in a channel since 2008. I want to talk to you about something very macro, but this is directly affecting you. And now you need to be paying attention to assets that are outside of your system. I don't even think you can rely on people filling their coffers with pensions and things like this, which is the traditional asset playbook. The dollar has been in a channel since 2008. When was Bitcoin given to us? 2008. It may be about to break down for that the first time. What are we getting in regards to regulations and people in charge? They're all coming from the crypto space. In fact, I would guarantee that the new Fed chair probably has a crypto element to him. Not guarantee, but I'm pretty positive that will be the case. Just like the Treasury Secretary, just like the SEC, just like anybody who's anybody within the cabinet. They're all very crypto friendly. Why is that? Well, it's because they know what this technology was designed from the start to do. And Bitcoin was that Trojan horse, I believe, but has cemented itself as an asset as far as store of value is concerned. This is high-level stuff we're talking about. So the dollar may be about to break. We predicted the dollar coming down to this lower band in the channel for a while. I didn't predict that it may be about to break free from it to the downside and erase this. And actually, I'm quite confident on this, not just based on this, but based on... Am I going to do it to you? Yeah, I am. Stuff I only really cover in Patreons, but this is the Euro US dollar, which makes up 45% of the Dixie index. This is about to break to the upside. Already has. Great British Pound, similar thing. JPY, similar. I mean, there is and this is why Christine Lagarde and Jerome Powell talking about, what they're talking about in terms of Bretton Woods and that repeat. in terms of the moments there, or the Nixon shock, is because we're at a similar point with geopolitical tensions and with kind of monetary policy, just like what led to the Nixon shock in regards to that lending out more than they had thing. And the world is now all moving towards and embracing the crypto space from a stablecoin point of view to help with the dollar and the debt system. I don't think it's going to go away, but I think it's going to, the cracks are here, just like Jamie Dimon talking about the cracks in the bond market. So people are going to see them, and he's warning you before it happens. It's already here. And crypto plays a very important role in regards to the transition that's coming, the digital world, the IOV sort of internet of value that's being formed. People just don't see that because retail generally is bogged down. I see it in the comment section. I just laugh. Bogged down by day-to-day price action. All this bullish news, no price appreciation. It doesn't work like that. Let's talk about the traditional financial system. This is from an individual called Pulte, who I'm not sure who he is. He's US Director of Federal Housing. Interesting. After significant studying and in keeping with President Trump's vision to make the United States a crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrencies as an asset for mortgages. This came out yesterday. So you're going to be allowed to use crypto that you might be getting a yield on already to essentially borrow money to buy a house. That's further transitioning from the traditional system that we had to a new one. I can't wait for them to do that. I'll be taking advantage of that multiple times over, probably. But this is huge. Fannie Mae and Freddie Mac are obviously big and have been for a long time. Traditional financial players. They're all moving towards crypto. Just today, JPMorgan have essentially filed a new trademark for JPMD, an up-and-coming deposit token that will deploy on Coinbase's base. Goods and services, virtual and digital currency, digital token and payment tokens, decentralized applications and tokens, blockchain-enabling currencies. And people say, well, Jamie Dimon doesn't like Bitcoin. Yeah, Bitcoin is not crypto. I can't tell you how many... It is a crypto, but I can't tell you how many people don't quite understand the broader transformational properties that DLTs have. They are the systems of the future. Forget short-term price action. Technically, I'm unbelievably bullish on the cryptocurrency space. Also, some more sort of bullish news, perhaps in regards to the UK, but it's very hard to be bullish on the UK right now. Jeremy Allaire, Circle CEO, encouraging discussion with the UK government on the future of the internet financial system and opportunities for the UK as a global financial technology hub. We are going to see so much confirming everything that we've been talking about in the next year or so. It's not even going to be funny. And when it comes to crypto, you've just got to think. One thing I always think about to calm people down when they get worried about price action is think about everything that's happened over the past year, couple of years, and look at where Bitcoin is. Think about everything that's happened over the past couple of weeks and look at where Bitcoin is. It's remarkable in regards to its strength and assets generally. I mean, look at this. QQQ put in a new high yesterday, which is the NASDAQ, or the US 100. Something like Nvidia put in a new high yesterday. Look at this. Totally erased the sort of Trump tariff max uncertainty for retail drama and is on to high legs. And that's all technically plausible and signaled. And crypto is just going to continue. The total cryptocurrency market cap is on the cusp of, I believe, fulfilling this falling wedge and breaking out into new all-time highs and price discovery. And I think there's a great fundamental story that happens there. We've got ETFs around the corner. Guys, we wanted to sort of cover some more macro-y stuff just because I thought it was so significant what Trump was saying there. His beef with Jerome Powell is really irrelevant. What's relevant to me is what he's basically saying there is $900 billion a year in terms of extra cost based on interest rates and the refinancing of debt. Very interesting. And ultimately, that's just further confidence I have in the great game. And every single person needs to understand the financial game. And, okay, maybe you're not a financially motivated person, but you have people that rely on you that need to understand this through you, as the head of a household or whatever it may be, so that you can help everybody. Because believe you me, that money does not buy happiness, but it makes things a hell of a lot easier. And I can attest to that, coming from quite a poor background. That's it from me, guys. I'm going to love and leave you. Thanks, everyone, for watching. I'll see you all in the next one.